Hi everyone, and welcome back to another Patreon video. I thought I'll start out this video with a little bit of context. We are going to go through Bitcoin, Ethereum, the others chart, and some altcoins to show you how I'm strategizing exit plans and managing leverage trades. But starting out with a little bit of context here. Obviously this post was back in 2022 where I was outlining the 2023-24 bullish case for Bitcoin, with the potential top coming in around 147,000. And I've spoke about this before, with the timing is off, but if we just see where we're at now, we're really starting to enter that final phase in where I thought we was, and my targets are still going to remain the same. A lot of people's targets are going to change. They're going to go for 180, 200, 300, 400, half a million Bitcoin. And my target remains the same, guys. 147 is the target. And we're really nicely approaching that zone now. In fact, if we was to extend that, we'd be in the zone. If we was to hit the log chart in the next couple of months, you'd probably be expecting possibly 160,000. So there's give or take. It's going to be hard to nail the top. So it's always going to be a matter of skimming off profits as you go from BTC and potentially playing the rotational aspect of the market. But let's just jump in now to Bitcoin. Lower time frame, we've got a big wick to the downside, a lot of liquidations, and potentially a big range set here. Spoke about these big ranges set in my course that I released quite a lot. So we've got a nice big range there now. And the main thing to be watching out for is the fact liquidity has been taken. Yes, the market often likes to fill at least 38 or 50% of these wicks, especially on the 4-hourly time frame. So all you've got to do, guys, is just pull it from high to low and look for about 50% of that wick to come in and get filled. The target right now would be about 94,000 on BTC, and that's nicely coinciding with these candle body closes and wicks here. So you've got a nice zone and an area there. 618, 95, 50%, 94. So I would expect at least 50% of that wick to come in and get filled. So the market is setting up nicely for a potential downside move, a little bit of chop. Not necessarily so bad for altcoins, because over the past couple of weeks altcoins have had them really nice moves to the upside. Like I said, we've had 400% moves, 100% moves here, and everyone's now expecting much more. But like I said in the last video, potentially a time period where we expect a little bit of chop. Let's take a look at where the wick to body trend lines come in as well. A nice trend line there that we'd really like to see manipulated below. So if BTC was to potentially come down and get the first hit of that trend line, get a fake bounce, get some early longs trapped, and then take them out into the 50% zone of that wick, that's what I'd like to see. And then you've potentially got yourself a nice big corrective move there for BTC, where we'd be then looking for the highs to be broken once again. And this could all be part of a bigger corrective structure. So I've seen these things play out many times on the lower time frame and higher time frame. So what this would do, it'd come down into a nice confluence zone here for BTC, around 94, 95,000. Get your initial bounce and potentially clear these highs, leaving these lows for a bigger corrective structure to be in place. I've seen this play out so many times, and then you'd be targeting about the negative 27% of our range there. Or we could take the full range and look for about 89. So these are the zones that I'm going to have marked out on BTC, zones of interest. Big massive zones of interest there. A clear break of 100,000 would bring in a lot of liquidity, higher the range, leaving these liquidity gaps to the downside for a potential big corrective structure there, expanding flat. For then the potential final wave to commence for BTC, hitting that potential 140,000 zone, which, look at that, coincidentally, these Fibonacci's line up very nicely for that. So lower time frame on BTC, potentially a little bit of chop. You don't want to get caught out running into December, where you sometimes have a mid corrective phase in December. Then January often starts out with a bit of a dump as well. So all of this could be taking place as altcoins are once again planning to take over. So let's take a look at Ethereum right now. And Ethereum's providing a very nice clear structure here, a very nice clear zone to watch out for pullbacks. If we get pullbacks to 3490 or 3200, I think it's a massive zone of interest on Ethereum. It's the very same structure that I outlined on the total market cap charts in the last few videos and the others chart. So yeah, nothing too much extra to be said about Ethereum. All I will say is, when you see these big bullish candles, guys, you know damn well the next week part of that big bullish candle is going to come in and get filled. It often happens. Just take a look at these moves to the upside. Look at that big candle there coming in to fill the wicks and fill the candle bodies, and again same here. So it won't surprise me, guys, to see a bit of a correction over the next couple of weeks. Moving on to the others chart, big massive zone here that we've had outlined for quite a while. I think the other day when we got a little bit of a flush on the lower time frame, I said watch out, because the real dip is yet to come. Okay, so this was, let's take a look. Right there, people was panicking on that dip, and I said watch out, guys, because the real dip is actually to come. So I think that region is still about the 360 billion zone for the others chart. So yeah, a little bit chop over the coming weeks. Nothing too much to worry about. Everything that we've been planning for, everything that we've been preparing for. We've got confluence on all of the charts for this little bit of chop to take place. However, it doesn't mean that some of the altcoins cannot run. For example, things like SIPO, I think it's looking very, very nice. Big bullish weekly candle here. All we need to do is take the big bullish candle of the range breaks, guys, and look for the 50 to 38%. For potential re-entries on the markets, and a nice big confluence zone coming back into these candle bodies here. So we've got very nice confluential zones here on altcoins that are perhaps breaking ranges now. So when you're looking at altcoins, I've been getting a lot of questions about exit plans and things like this. When you've got these range breaks like these, guys, the market's often going to come in and fill some of these candle bodies, like I say, 50 to 38% of them. Watch out for that. And then all you need to do is, on them big candles that break the range, mark out your 4.236, and that can be your potential first take profit zone. And then you've got your Fibonacci trend-based fibs to potentially look for the pump, dumps back to the 1.618, and you've got your higher regions there to potentially take profit into the future. If we are heading into a meteoric alt season, you're looking for the 1-to-1, 1.414 and the 3.414 as your major TP zones. Won't be looking too much extra further, but like I said, the plan is always going to be different for people. People are going to want to take profits at different stages. People are going to want to take different percentages at different stages. So just figure out what's best for you, guys. These are the ways that I plan my exit strategies. Use the big bullish candles of the range breaks. Pull the fibs. Look for the candle body fills with the wicks in the weeks to come as we anticipate a little bit of chop. And it's important to not let the market scare you out of these positions, because I do believe the biggest runs are yet to come. Let's take it back to the others charts, take it to a higher time frame, and look exactly where we are. Look on the 3 daily time frame, guys. If we was to get that flush back to the downside into that zone, it's only a zone where I believe we are heading into the 800 to 1 trillion zone for the others. So it might not seem like too much of a move to the upside, 100, 200%. However, when you see these moves, guys, the altcoins can run thousands of percent in these moves. So if you've seen the moves over the past coming weeks where the others chart has pretty much gone up about 150%, and you've had altcoins running 600, 500%, imagine what them altcoins are going to do with another 100 to 150% move. Again, you're talking about an extra 300-400% on them altcoins that, if you're in from the lows, brilliant. Because let's take a look at something like HBAR. Okay. So if you're in from the lows, like I know a lot of people are, you've already, well, I've already taken a little bit of profit up at these levels, guys. It's a mistake not to. When you see these big, let's take a look at that, 700% moves. I mean, if you're not taking profit after 700% moves, it doesn't have to be the full lot, but if you're not, I mean, the market at some point is going to teach you a lesson. So expecting pullbacks on things like HBAR, things like XRP on the lower time frame. I'd be watching for things and wave structure like this to play out. Seen this to play out many times, where the market will go in and take them wicks, come back down, fill some of these candle bodies, going for an expanding flat there, and then continue to the upside, and that's when we potentially get our extra 300-400% moves to the upside with the potential alt season heading into the new year. Of course, I do believe we are already in alt season. I mean, you don't get these 700% moves without the alt seasons, but the alt seasons don't tend to last too long, like I've said before. You can be stretched for about 3 months. So it's important to recognize the fact, guys, that these alt seasons do not always last too long. So if you see your coins up 500-600%, just make a note of it. Make a note of how you feel. How have you felt in the past when your coins was down at the lows and you was begging for a 700% move? How are you feeling now that these moves have coincided with them emotions? Are you feeling euphoric? Are you feeling like you want to wait for higher? Are you setting price targets and imagining how much money you're going to have at these price targets? Because let me tell you, that is the wrong thing to do, because when you get to those price targets, you're only going to add price targets further and further away before you just don't end up taking any profit at all. So like I said, guys, let's do the same here on HBAR as what I did for C-Pool. So all you want to do, here we go, big range breaking candles here. There we go, big range breaking candles. You can see that that wick came to the top of that zone that was outlining on the big bullish candle. Big range breaking candle there, guys, came to the top of these zones that we're looking for a potential pullback. Does it mean it's the top? Not necessarily. And then what are we doing? We're pulling our trend-based fibs from the lows to the highs, back down to the potential full candle body fills, and then we've got our extensions heading into the future for the all-time high breaks. So simple methods here, guys, but you don't want to be missing out on the 700% moves. You want to be taking a little bit of profit. Obviously, leverage is different. So let's say right now I'm in a leverage position on C-Pool. I've been posting about it. So right now, the only place I'd really be looking to add leverage is in around the 38 and 50% of this candle body. So that'll be 31, 34. You don't want too much leverage in the system, but leverage is there to be capitalized on as well. So manage your leverage. If you're in a position where you are in profit, maybe you want your stop loss to be at break even or above, it's always a good way to protect yourself, because let's say, guys, little example here. Let's say you're in from the other day when I posted about C-Pool, I think it was about 25 cents or something like that, and market's now up about 40%. Okay, so you've got your spot position and you're potentially waiting for a leverage position. If the market comes back down and you hit this zone, you're back to your entry on spot, so it makes no real difference at all. And then all you're doing is adding a little bit of leverage with potential stops in and around these regions. Because if you low X leverage, your stop down here is not going to lose you too much money, depending on size. So realistically, if your spot position's coming down, no problem. If you get a little bit of a bounce from here from your leverage, great. Set your stops at break even here. If the market takes it out, your stop gives you all that money back, and then you can just add spot here for potential bounces back to the upside, which puts you at instant profit. So a little bit of managing can be done on the lower time frame. So that's just setting stop losses at break even when you're in a position to do so. And then if the market hits that break even stop, you've got the option to put that money back in a little bit lower if you want in the market. So you're always leaving yourself nice little options. But C-Pool, like I said, guys, it looks great on the higher time frame, on the lower time frame. I think we're setting up for some kind of a move like we had on CRV. So whether we come and fill this or we start to do something like this, you know, I'm thinking $1.80, $2. Come and fill these big candles on the monthly time frame. Let me show you those. There we go. So very similar to what XRP did back in the last run up. Let me show you what I mean. Okay, using the market cap here. You see, that big run back to the upside there was them big monthly candle closes. So always zones to be watching out for. I think for C-Pool, very, very possible. A lot of altcoins I'm providing different strategies, but they're all very, very similar in nature, with the fact that we're looking for them pumps, we're looking for the dumps where the big bullish candle breaks, and we're then looking for the trend-based fibs of the pumps and dumps to get our extensions for the all-time highs, not negating the fact, guys, that we are taking profits along the way. My sweet spot right now for XRP and HBAR, things like DOT, has been about 30 to 40%. If we drop, then I'm glad I've took it. If we continue to the upside, I'm still happy with that position in the market. So, a couple of things to watch out for, guys. A little bit of chop, I think, in the coming weeks. December, people taking a holiday break. Perhaps selling before the year's end and then buying back. These are things that people do in the market, so expecting a little bit of chop in and around the festive period. But again, guys, the higher time frame remains the same. Let's skip to the total market cap now, one of the big ones. Okay, we'll zoom out and I'll show you exactly what I'm looking for on the total market cap. Okay, so we've already broken the all-time highs. The kind of thing that I'm looking for on the monthly RSI here is this trend line to be hit for a mediocre top to be put in. So it would be something along the lines of this. So something like that. Just come back down, set another high. I'm looking for that 4, 5, 6 trillion zone, for that bearish divergence to come into play. Bit of the alt runs to coincide with BTC topping, retracing, going back to the key retracements and the alts really outperforming, and the BTC dominance falling. Right now we've had a clear market structure break to the downside. On the weekly time frame, it becomes a little bit more clear as to where the market might want to bounce to. Okay, so even on the show you on the RSI there, we've even had an RSI trend line break. It's always nice to see. So yeah, just like the price action, big RSI trend line break, price action trend line break. Nothing to say we can't move back up and retest these levels. So look for that 58, 59% level, look for that RSI trend line on the weekly time frame to get retested, and then looking for more downside moves. So BTC potentially taking a little bit of dominance back over the next coming weeks as people get potentially scared out of their altcoin positions, as we know a lot of people have come in to buy the tops. So the market might give them a little scare, 30-40% drops, XRP, HBAR, DOT, things like this. But just recognise, guys, I think we're at the end phase of the market, but the beginning end phase of the market. A little one here, guys, that I want to show you is Tilray, looking like a great stock at the minute. Major bullish divergence here. Hidden bolt. Take a look at this. Price has come down, set a low, but the RSI on that weekly time frame is maintaining that trend line to the upside. Really nice market structure here. Could be a big year for Tilray 2025. And on the monthly time frame, show you here on the monthly time frame, we've got that 40, that key 40 level on the RSI holding. So there we go, that 40 level, big bullish divergence here. High in the RSI, low in price. Is Tilray setting up to make one of them moves that Lumen did? Remember Lumen? What a move. What a great move that was for Lumen. Massive 9-10x. If it wants to load, yep, there we go. It came back to our key market structure level, which was that $6 to $7 region, and the high levels was 9. From the lows, we're talking 500, 600, 700% move. So nothing to ignore I think a lot of altcoins are setting up for major moves, guys. Of course, it's not financial advice. We just need to get through these next periods of chop, understanding where the others, the Ethereum, the total market cap charts can pull back to, HBAR, XRP, DOT, things like this, and looking at opportunities and how to set exit plans and exit strategies. All the focus in 2022, 2023, 2024 was the entry plans and DCAing. Now the focus is going to be on the exit plans and getting out of the market. Are we going to time the top? Who knows? The only thing that I know, guys, is that we're winning at the minute. The market's up, we're up, we're taking bits of profits, and we're securing our survival for the next cycle. It will come. The crash always comes, just like the pump always comes. So sit back, relax. It's not financial advice, and let the market do the work.